If these estimates hold, with a forward PE of 55 in fiscal year 2025, the stock could potentially rise 2x its current price in the next 1 to 2 years. Hi friends, Premier Energies has given more than 100% returns on their IPO price in just a few days. What is driving this stock up so quickly? Why are the investors after this stock? The excitement over the company is primarily due to the fact that it's a renewable energy stock, and most of these renewable energy stocks are valued highly and are trading in high PEs. In this video, I'll explain why I believe this stock could potentially see 2x gains in just 1 to 2 years and possibly 3x gains or more in 3 to 4 years. To justify this prediction, we will discuss in detail the projected revenue and profits for the company over the next few years and what it means for the stock performance. Please do not take this as a stock recommendation and do your own research before investing. To better understand the business that Premier Energies is engaged in and why it is so highly valued, it's important to grasp how the solar value chain works. Solar panels are made from solar modules which are assembled using solar cells. These solar cells are produced by cutting wafers from ingots, both of which are critical components in the manufacturing process. Polysilicon is a highly purified form of silicon, which is the key raw material used to create wafers and ingots. It is derived from processing silicon dioxide or silica through a complex purification process to ensure silicon is of high enough quality required for solar applications. Silicon dioxide is found abundantly in sand or in quartz, which is a mineral you find in the rocks. At present, the raw materials for solar cells like wafers are primarily imported from China. Due to limited manufacturing of solar cells here in India, most solar module manufacturers also import solar cells from China. By understanding this flow from polysilicon to wafers to cells to modules and ultimately panels, you can see how interconnected and resource intensive the solar manufacturing industry is. With this background, let us understand why Premier Energies has become such a hot stock of recent weeks. There are over 100 plus solar module manufacturers registered in India. They are competing for a huge market that has opened up since the central government started promoting renewable energy. The names include big players like Waaree Energies, Tata Power, Adani Solar, Reliance New Energy. Though there are over 100 plus players for solar module manufacturing and many more players in the developer space who are procuring and deploying these modules, there are only 4 players at present who manufacture solar cells that are assembled to create these modules. Most of the solar module manufacturers here and elsewhere in the world just import the solar cells from China, and China is by far the global leader in this space. First and foremost reason for Premier Energies to shine is that it is one among the only 4 Indian vertically integrated solar module manufacturers who manufacture both solar cells and solar modules, and it is the second largest one after Mundra Solar of Adani Group. Globally, about 90% of the solar cells required to build solar modules are manufactured in China. India is currently a small player in this space, so small that you may be surprised to know that while China's solar cell capacity stands at 982 gigawatts, India's contribution is just 8 gigawatts, which is a tiny fraction of China's output. This is despite the fact that India is one of the top 3 solar module manufacturers in the world with an installed capacity of 89 gigawatts. We are also third largest producer of solar power globally and consume nearly 8 to 10% of all the solar panels manufactured worldwide. Although we currently produce about 1/5 of the solar energy that China does, and our share is growing rapidly, our solar module manufacturing capacity is about 1/10 of China's, and our solar cell manufacturing capacity is less than 1/100th of theirs. This highlights the significant potential for growth in India's solar cell manufacturing sector. With a long way to go to meet the local demand for solar cells, Premier Energies, being a leader in this space, has become a stock in demand. The solar cell manufacturing is poised for big growth here in India due to push from the government for local manufacturing and reduced dependency on the Chinese imports. Traditionally, Indian solar module manufacturers have been importing cheap solar cells from China and assembling them here to create modules and panels. This is because solar cell manufacturing is a very complex and risky process which requires about 3 to 4 times the investment required to set up solar module manufacturing. Each of the cell manufacturing steps involves several high purity semiconductor grade gases and chemicals as inputs. It involves complex supply chain management due to diverse mix of raw materials and chemicals involved in the process. Effective management of utilities 24/7 is crucial for safe, efficient and high yield solar cell production. In addition to this, there is a risk of technology change that inevitably happens every 3 to 5 years for solar cells. Sometimes this can make the manufacturing setup obsolete, requiring fresh capex to be raised by the manufacturers to move to the new technology. Premier Energies has over 14 years experience manufacturing solar cells and over 25 years manufacturing solar modules. The company has successfully navigated through several technology cycles and also gained experience over the years managing the complexities of solar cell manufacturing. The present cell capacity of Premier Energies is 2 gigawatts, while the module capacity stands at 4 gigawatts. An additional 1 gigawatt of cell capacity will be added by the end of this fiscal year 2025. The company plans to add 4 gigawatts of solar cell and 4 gigawatts of module capacity within the next 2 years, bringing the total capacity to 7 gigawatts of cell capacity and 8 gigawatts of module capacity. The proceeds from the IPO will be used to partly fund this increase of capacity, while the rest of the capex for the expansion will be raised by fresh borrowings of about 2,400 crores. The company also has other big plans. It plans to set up a solar cell manufacturing plant in the US by tying up with Helion, a US-based solar module manufacturer with over 2 decades of experience. This will happen in the next 2 years. At present, the Premier Energies is practically only Indian company exporting solar cells to the US. Last year, nearly 98% of the solar cells exported from India came from Premier Energies. To further localize the solar cell production, the firm plans to set up a wafer and ingot manufacturing plant of 2 gigawatt capacity. Presently, the wafers are imported from China. The company claims that it expects the entire solar module supply chain to be localized in the next 3 to 4 years. The question that naturally arises in one's mind is, can Premier Energies compete with the cheap solar cells and modules dumped from China? Why would Indian and global companies go for locally produced solar cells and modules? The fact is that market for domestically produced solar cells is expected to go up significantly in India and in the US in the coming days. The reason for this is simple. With the government schemes like PM Kusum, PM Surya Ghar Muft Bijli Yojana and the CPSU schemes coming into play, there is a huge push for utilization of locally produced DCR solar modules within the domestic solar market. The central government also plans to float tenders for 50 gigawatts of renewable energy production every year from now until 2030, and 80% of that will be coming from the solar energy. The PLI and other schemes provided by the government funds firms like Premier Energies engaged in domestic manufacturing of solar cells. The Domestic Content Requirement or DCR is a policy implemented by the Indian government that mandates a specific percentage of components, including cells and modules used in solar power projects, to be sourced from domestic manufacturers. This percentage requirement applies particularly to projects funded by the government, and this percentage increases every year. Presently, 40% is the minimum domestic content requirement, and it will go up to 45% for projects starting construction in calendar year of 2025, 50% in calendar year 2026, and 55% thereafter. This policy is there to boost domestic manufacturing, create jobs, and reduce dependence on the imports. DCR is a powerful market driver that ensures guaranteed demand for domestically produced solar cells and modules. In fact, the demand for domestic solar cells has already outpaced the current 8.1 gigawatts of installed production capacity of solar cells here in India. And this market for domestically produced solar cells is expected to grow exponentially in coming years to about 78 gigawatts by fiscal year 2028. Now let us quickly visit the demand for locally produced solar cells here in India in the US market. US has adopted a China plus one strategy and implemented the Inflation Reduction Act to incentivize local manufacturing of solar modules. These schemes require solar cells used in modules to comply with ESR or environmental, social and governance standards, and the Uyghur Forced Labor Prevention Act that applies to Chinese goods. This benefits Indian solar module manufacturers like Premier Energies that are working towards freeing their supply chain from Chinese origin components like the cells and the wafers. The solar module manufacturing plants are being set up in the US, and to qualify for government incentives, these local firms require solar cells from alternate destinations like India. This situation is similar to that in India, where Chinese products are increasingly discouraged. In the US, approximately 40 gigawatts of solar module capacity is being added every year, but only 5 gigawatts of solar cell capacity is produced locally. The rest must come from imports, which presents an opportunity for companies like Premier Energies, which export solar cells. Moreover, as I said earlier, Premier Energies plans to capitalize on this demand by setting up a solar cell manufacturing plant in the US by forming a JV with a local player in the solar sector. Now that we understand there is a strong demand for domestically produced cells and modules here in India as well as in the US exports market, let us try to see what this means for the future revenue of this company. Premier Energies has a strong order book of around 6,125 crores, which needs to be executed in the next 18 months' time. Another 4,000 crores of orders are in advanced stages of discussion according to the company management. Premier Energies had a revenue of 3,143 crores in fiscal year 2024 with a PAT of 231 crores with a profit margin of 7.3%. In quarter 1 of fiscal year 2025, their revenue was 1,657 crores with a PAT of 198 crores and a net profit margin of 12%. Based on the quarter 1 revenue of the company, we can estimate the revenue of fiscal year 2025 to be 4 times the revenue of 1,657 crores earned in the first quarter. So this translates to 4 into 1,657 crores, which is roughly 6,600 crores. The management of Premier Energies has confirmed that 6,600 revenue figure is a reasonable one for the current fiscal year. From the IPO proceeds, the company plans to expand its solar module capacity to 8 gigawatts by the end of fiscal year 2026 and its solar cell capacity to 7 gigawatts by the end of fiscal year 2027. While the increase in module capacity can be achieved within 2 years, the additional 3 gigawatts of solar cell capacity will take about 3 years to stabilize. The company presently is in the process of adding 1 gigawatts of solar cell capacity, and this should complete by early 2025, bringing its total cell capacity to 3 gigawatts. By fiscal year 2027, the solar cell capacity is therefore expected to reach 3 gigawatts, while the module capacity will double from the current 4 gigawatts to 8 gigawatts. By fiscal year 2028, the entire planned 7 gigawatts of solar cell and 8 gigawatts of module capacity should be fully operational. Given the management's indication of high demand and strong order book, it is likely that the company's capacity utilization will be significant in both fiscal year 2027 and fiscal year 2028. Since the capacity will double in fiscal year 2028 when compared to fiscal year 2025, we can expect revenue to double as well. So the revenue that can be expected for fiscal year 2028 would be 2 into 6,600, which is 13,200 crores. Meanwhile, for fiscal year 2027, with an additional capacity of 1 gigawatts of solar cell and 4 gigawatts of solar module becoming operational for fiscal year 2027, we can expect an additional revenue of about 4,800 crores in that fiscal year. I deduce this based on the past financial data for the firm, which indicates about 1,600 crores of revenue earned for each gigawatts of cell and module capacity. 4,800 crores additional revenue is a reasonable figure considering the fact that I assumed only about 60% capacity utilization, since not all of the extra capacity added may get utilized. So total revenue for fiscal year 2027 will be around 6,600 plus 4,800, which is 11,400 crores. Now let us look at the profit estimates for the Premier Energies in the coming years. The Premier Energies management has said that margins for the firm in coming years is expected to be in the mid-teens, that is around 14 to 15%. In quarter 1 of fiscal year 2025, the PAT margin was around 12%. Assuming 14% PAT margin, we can expect about 6,600 into 0.14, which is 920 crores of profit in fiscal year 2025. Similarly, for fiscal year 2027, the profit is expected to be 11,400 into 0.14, which is 1,596 crores. For fiscal year 2028, the estimated profit would be 13,200 into 0.14, which is 1,848 crores. One thing to keep in mind is that, except during COVID, Premier Energies has always been profitable in their 29 years history. During COVID, they suffered losses since they had invested heavily in capacity expansion and they could not operationalize it on time due to COVID restrictions. This has been a family-owned business. This is the only business for them, and fiscal prudence is super important for them. So given these numbers for revenue and profits for Premier Energies, let us calculate the forward PS and forward PE ratio for the firm for fiscal year 2025, 27 and 28. This should help us predict the stock price movements in the coming years. The market cap for the firm is currently at 51,000 crores. So for fiscal year 2025, the PS ratio is expected to be 51,000 divided by 6,600, which is 7.72, and forward PE would be 51,000 divided by 920 crores of estimated profit, which is about 55. 55 is a very attractive forward PE for a firm in the new energy sector. For fiscal year 2027, the forward PS ratio is 51,000 divided by estimated revenue of 11,400 crores, which is 4.4. The forward PE ratio would be 51,000 divided by estimated profit of 1,596 crores, which is 32. Similarly, for fiscal year 2028, the forward PS ratio is 51,000 divided by 13,200, which is 3.86. And the forward PE for fiscal year 2028 is 51,000 divided by 1,848 crores, which is 27.5. If the company continues to grow and management performs well, Premier Energies could deliver strong returns for its investors over the next 3 years and beyond. As the renewable energy sector is set for substantial growth, especially with India targeting zero carbon emissions by 2070 and 500 gigawatts of renewable energy by 2030, we can anticipate the company's PE ratio to remain high, around 90 in the coming years. If these estimates hold, with a forward PE of 55 in fiscal year 2025, the stock could potentially rise 2x its current price in the next 1 to 2 years. Looking further ahead, with an expected forward PE of 32 and 27 for fiscal year 2027 and fiscal year 2028 respectively, the stock could see a 3x increase in 3 to 4 years. My revenue and margin numbers are validated from a recent interview CNBC did with Chiranjeevi Saluja, the MD of Premier Energies. Saluja discusses these exact figures, so you can be assured I am not making these up. I will leave a link to the video in the description below for you to check it out yourself. You can also check out my video on Waaree Renewables linked here, where I dive deeper into exponential growth expected in the solar sector over the coming years and the huge opportunity this presents for companies like Premier Energies. So that's it for today, folks. We'll catch up with you in the next video. Have a great day. Bye-bye.